Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and today I am just going to talk about the Nasdaq Composite Index. Right now I'm outside in public, just chilling out right in front of Starbucks. A lot of sound going on. I hear a jet flying by, so if you guys hear it, you guys know what it is. But basically, the Nasdaq has had a pretty negative session. They lost like around 60 points. The Nasdaq has been losing a lot of points for the past, I believe, three months now. So again, technology has been hit pretty hard. We've hit Hewlett Packard. They've lost a lot of shareholder equity over the past couple months. Apple did pull back. So again, there's a lot of technology companies that have been losing a lot of value. We've even seen IBM have a decent pullback. Again, I would pull up the charts, but I don't really have enough time in this video, or more like I want to keep the video short. But pretty much technology is being hit pretty hard. However, the Nasdaq is consolidating towards the bottom end of the chart. The volume is average right now. So again, it kind of shows that people are a little skeptical, a little patient. They are kind of nibbling on these technology companies right now. But again, I wouldn't risk it. I'd be a little cautious going into technology companies. I'd look more. I'd be more interested in safer equities, especially for dollar cost averaging right now. It's probably a good idea to look for, I guess, utility companies and stuff like that. Things you know would work out if in the event technology companies continue to miss their earnings, or if in the event guidance continues to fall, like what we saw with Qualcomm and what they were saying about mobile technology companies and basically their chip business. It isn't going to grow as fast as they were expecting, and basically if the chip business is kind of falling behind for Qualcomm, it means that cell phones in general are going to have a pretty decent pullback that had an impact on Apple's earnings, and that's also having a significant impact on the Nasdaq Composite Index. So again, technology companies are having a hard time posting growth and giving out those forecasts that everybody wants to hear. So again, guidance has been weak, earnings haven't been as good as it could be, and we're seeing a lot of technology companies become commoditized in the space. So again, that's pretty much what the Nasdaq Composite is showing right now. Good areas for growth are probably web companies. Again, Facebook did release their IPO. Again, the IPO didn't really work out as well as everybody was hoping for it, and the value of the stock did tank initially. We're seeing a small recovery, but again, you really want to be very selective with technology companies. You really want to look for areas that are growth. You don't want to be in companies that have become commoditized, or companies that are becoming durable goods. And the companies you really want to avoid are companies like Hewlett Packard and Dell, because those companies are definitely becoming commoditized, and they're also becoming and computers themselves are becoming more of a durable good. So you generally want to avoid technology companies that aren't growing, and you really want to focus on high growth opportunities, and you have to be really selective amongst technology companies. And it's going to be a really, really difficult environment to be a winner in the technology space, especially since the Nasdaq Composite has lost a lot of value over the past couple of months. So generally, technology would be a pretty hard place to be profitable at. Anyway, that does it for me for today. The main idea is to play it safe, look for selective opportunities, and you probably want to continue to dollar cost average into these companies, which you still and you really want to be patient, because growth stocks do require time for them to at least reach their potential. And for companies that aren't meeting their potential, or in fact are becoming commoditized, again, just get rid of them. There's no reason why you should hold on to stocks that are becoming more and more durable goods, more and more becoming commodities, and continue to lose money, continue to cut back their labor force. It is really not a good sign over the long term. Take care, folks, and I hope you guys have a good one. See ya.